4 Buffett stocks that will be on fire for the next decade. As I was going through some articles today, I came across this one, and these companies will be on fire in a good way. I'm not a financial advisor. Always do your own due diligence before investing. I do own shares in all of these companies, and I guess I will profit from them growing. Once again, on the Fool.com, the Motley Fool, 4 Buffett stocks that can be surefire winners over the next decade. The Oracle of Omaha has a knack for picking out great companies. When it comes to picking great stocks, Berkshire.A CEO Warren Buffett is in a class of his own. Over the last 55 years, Buffett has helped Berkshire's stock achieve a compound annual average gain of 20.3%, which more than doubles the total return of the S&P 500, inclusive of dividends. Overall, $100 invested in Berkshire.A stock at the beginning of 1965 would have been worth over $2.7 million by December 2019. When Warren Buffett buys a stock, Wall Street and retail investors pay attention. The Oracle of Omaha has a knack for picking out winners. There is a good chance that Berkshire.A portfolio holds a number of companies with the potential of outperforming over the long run. Here are 4 Buffett stocks that have the tools and intangibles to be surefire winners over the next decade. And the first stock is Bank of America. Bank stocks are possibly the farthest thing from investors' minds at the moment. That's because the Federal Reserve dovish monetary policy and limited quantitative easing measures are going to hamper the net interest income earnings potential of banks for at least a few years. Add on the expectation of rising loan delinquencies associated with the coronavirus disease 2019 recession, and you have a recipe for compressed earnings growth. However, none of this is going to be of long-term concern to money center giant Bank of America. Among the big banks, none is more interest sensitive than Bank of America. This implies that when the Fed does begin to raise its federal funds rate by mid-decade, Bank of America is going to be the prime beneficiary. In other words, its earnings could expand at a more pronounced rate than any of its peers. That's an attractive proposition, with the company currently valued at 84% of its book value. Furthermore, Bank of America's digital engagement trends are very promising. Digital sales, mobile and online, represented 44% of consumer sales during the recently ended third quarter, up from 29% on the prior year period. In total, there were 2.3 billion digital logins in Q3 2020. Since online and mobile transactions cost Bank of America so much less than in-person and over-the-phone interactions, these cost savings should boost the company's bottom line. And company number 2 is Amazon. E-commerce kingpin Amazon was purchased by one of Buffett's investing lieutenants early in 2019. Even with a market cap of close to $1.6 trillion, it should remain a core holding with significant upside for long-term investors. Although retail margins are usually very thin, there is plenty of opportunity for Amazon to pivot its retail dominance into added profits. The company's superior logistics have helped sign up more than 150 million Prime members worldwide. The fees Amazon collects from these members pad its margins and help it undercut other retailers on price. It also doesn't hurt that folks willing to pay for a Prime membership are more likely to do their shopping with Amazon rather than a brick-and-mortar competitor. Yet, retail isn't Amazon's fastest growing industry. Over the long run, the company's cloud infrastructure segment, Amazon Web Services, is what makes this company a bargain. With COVID-19 forcing employees out of the office and pushing small and medium-sized business online, the building blocks of cloud infrastructure have become more important than ever. That's great for Amazon because cloud margins are light years higher than retail and ad-based revenue. AWS will likely play a key role in Amazon tripling its annual operating cash flow by 2023 or 2024. And our company number 3 is Visa. If history has proven anything, it's that payment processor Visa can be held down for long, if at all. Like Bank of America, it's dealing with weakness from the COVID-19 recession as consumers holster more of its cash. Still, the future remains bright for this Buffett stock. Visa is the most dominant payment facilitator in the US, the largest economy in the world by gross domestic product. Between Through of 2009 Great Recession and 2018, the amount of purchase volume traversing its network surged by 156%, with Visa picking up close to 10 percentage points of market share in the US since periods of economic expansion last considerably longer than economic contractions or recessions. Buying and holding Visa is a smart numbers bet. Also, don't overlook Visa's role in the payment processing space. While some of its peers act as both payment facilitators and lenders, Visa sticks to the facilitation side of the equation. When economic contractions and recessions arise, Visa doesn't have to worry about any direct impacts from rising loan delinquencies. This is why its profit margin is usually above 50% and why the company emerged from downturns much faster than other financial stocks. And finally, company number 4 is Berkshire Hathaway itself. A final stock that should be a surefire winner over the next decade is Berkshire Hathaway. Though Buffett's own company doesn't show up in his investment portfolio, he and his right-hand man Charlie Munger have approved the repurchase of nearly $13 billion in Berkshire Hathaway stock over the past 2 years. As noted earlier, Buffett and his team have a knack for making investors money. As CEO, the Oracle of Omaha has overseen the creation of more than $400 billion in value for Berkshire Hathaway shareholders. Berkshire has been so successful partly because Buffett has loaded his company's portfolio with cyclical multinational companies like Visa. Buffett's playing the numbers game and simply betting on bull markets lasting considerably longer than periods of contraction. As long as US GDP expands over time, Buffett's portfolio should do well. Buffett and his team have also acquired around 5 dozen diversified businesses over many decades. In many instances, these are businesses that can thrive in any economic environment. If not for Buffett's investment in Apple, which has gained about $80 billion, Berkshire's acquisition of insurer Geico might be the Oracle of Omaha's greatest investment of all time. These companies are making money now, which lead us to think that they will only do better and better as we get past this. Please do drop a like and add a comment. What do you think about these companies? Are they good investments? Is it too late to buy them now? I have been investing on these companies for maybe a year or 2 ago, and I'm still investing on them today, but I wish I had started investing on them 2, 3, 5 years ago when they were even more affordable. But for the long run, I believe it's great to be investing in companies that seem to have great, strong foundations that can get through any type of economic crisis. Thank you so much for watching this video. Feel free to check out some of the next videos coming up on the next screen. Have a wonderful day.